The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. Thank you for joining this live video I provide open today for everyone who wants to join this presentation. The plan of the presentation. First of all, the dollar index, DXY, and euro to the United States dollar charts. Long-term and short-term charts. Then a few words about precious metals I used to track in both main room and in the Forex room. The precious metals highlighted in the Forex room are Forex pairs as XAU to the United States dollar and XAG to the United States dollar. Then I'm heading towards the main Forex pairs, the British pound, Japanese yen, Canadian dollar, Swedish krona, and Swiss franc. After that, a few selected minor pairs like Australian dollar, New Zealand dollar, Mexican peso, Russian ruble, and Polish zloty. And finally, I'm going to end up with Bitcoin and Ethereum, which I used to track in the Forex room as well. If you have any questions, please use the question box provided by the software control panel. That would be the best way for me to assist you at best of my abilities. Okay, now let's get started, and I start with the dollar index. This is the count of a large degree. I have the pattern has been revised earlier today, and this is the new count of a large degree I'm ready to present. First of all, I still see a really strong bullish potential in the United States dollar. After this pullback will complete, I'm looking forward to the next move up towards possibly at least 104 or 108. All those targets has been presented earlier, but for many reasons, I have switched to the bearish scenario, and for now it's unfolding here. I'm looking for lower targets. Basically, every count is a subject to revision, so please always keep in mind possible alternatives, but for now I see this scenario, this bullish scenario, as really more likely. Over 84.1, I do not see a really strong bearish alternatives. So basically, I'm looking forward to extension towards 90.5 or at least 87.87. You will see all these targets on charts of a smaller degree. The daily chart. The daily chart shows internal wave structure of the wave 4 as I see it now. Most likely, we have completed wave 3, or at best, we are completing wave 3 of 3. And this target area is potential target for the wave C of 4. The primary count and a couple alternatives are telling that we may be already in the wave 5 of 3, or I could assume that the next low may be all of the wave C of 4. But correct answer will be given later and lower. For now, this is the scenario of direct decline, and below 93.9 this scenario remains valid. The alternate 1 count and alternate 2 micro count are showing the bullish potential, local bullish potential, and the ideal target may reside at 94.11. Over 93.21, this target remains fully intact, and personally I'm leaning to this local bullish scenario and potential variations of this scenario. First, corrective bounce followed by also corrective pullback within the wave B of a large degree, wave 4. So higher targets in the wave 4 are still intact. Potentially, this correction may take form of a contracting triangle in the wave 4. It would look that way: A, B, C, D, and E. So far, I have only outlined this scenario by the blue dotted trend lines, but will be more certain later and lower. I will be looking forward to 1.0 extension to the downside and reaction to this support. Presumably that would be a 92.5, and reaction to this support will certainly clarify the best scenario. So below 93.9 we're heading lower, but for confirmation we have to break the previous low and to form complete 5 waves down. Otherwise we're heading higher within corrective local rally. Euro. I start with a large degree count. The problem with Euro is two main different data feeds. One of them is based upon the currency basket that formed the euro later, and the second one is based upon the German mark. And I have seen both charts and they are really quite different. But for now, I'm going to take this chart as my operative scenario, and the count looks as follows. We have long-term 3 waves up started in early 80s, A, B, and C. Now we're tracing wave A of a large degree, wave B, and please note that we may be facing a really strong rebound matching with wave B of B. Finally, I'm looking forward to extension towards much higher, but this is a perspective of a multi-year or possibly multi-decade period. Back to the mean. Okay, most likely wave A of B is still in progress. At least I see it valid below 1.2624. Wave 3 is over, and we may be tracing wave 4. Alternatively, I see that wave A is already over, and waves A, B, and C are our intermediate term perspective. If this scenario is going to play out, then wave 1 of C may be considered as being in place, and we're tracing pullback in the wave 2. Now, zooming into the daily chart. The primary daily chart has lower targets for corrective pullback in the wave 4 of CO4. This is the ideal target for the fourth wave, which resides below the critical level. After we complete this pullback, I'm looking forward to extension to at least 1.2388. The alternate scenario is supposed to extend much higher. Ideal target is 137 area. But I'm going to primarily focus on the primary chart, and micro level is looking this way. Basically, I'm looking forward to higher targets in the wave B prior to extension to the downside in the wave CO4. A, B, and C. The blue dotted triangle represents the options similar to introduced in the DXY part. So this may be looking as A, B, C, D, and E, and then wave 4 is supposed to resolve to the upside in the wave CO4. In the case Euro is going to hold below 1.1831, this chart is going to extend lower and break below 1.1686, opens the door to this target area for the wave 4. Basically, pullback is supposed to start either here or from here. So both charts, both options are pointing lower. The difference is just the starting point of the next move down. and only in the case we take out 1.19 on really strong technicals, I will be trying to revise this decline scenario. Just a common note: please note what time this rally took. It has started in March 16. Maybe a little bit off. I'm sorry, in March 2020, and for now it took 8 months. The fourth waves may take up to 70% of entire time of an impulse, so please get ready to see this consolidation or correction resuming further and further out in time. Don't jump the gun with massive longs position if you want to trade long, or be careful with short positions, as this is the fourth wave. I see only local small-sized trades as possible option to trade within this consolidation or within this correction. Then, when we get clear one to up of the fourth wave low, then we probably could take a long trade within the wave 5 of C. But completion of the wave 3 of 5 would be a strong signal to seriously revise positions and most likely to reduce them. In the case we see strong technicals on the way higher, this is the ideal target for the fourth wave, and in the case we see this region taken out on really strong technicals, then we are in the third wave, and the wave to 1.37 will be open. Then we could always add to our long positions and trade with much more confidence, in the case we see really strong technicals here. Basically that's it for the dollar index and euro. And if you have any questions, please post the question box provided by the software control panel. Now we're heading to the precious metals world. And this is gold. First of all, I want to present a potentially frustrating chart. I do apologize. Please note this red count. The chart is not complete. I have seen the chart started with beginning of the 19th century, and those charts present much more a really different pattern. But for now, please note how gold nicely follows this count: 1, 2, 3, 4, and 5. This count means that extension towards 2320 could complete entire rally and provide a really strong pullback. Please keep this option in mind. Don't be overly bullish until we have taken out this resistance. At least that would be a nice place to hedge. By default, I consider this chart as really pretty bullish. And now closer to smaller timescales. The daily chart, which I mark as a primary, has gold in the corrective fourth wave, and the near-term perspective as completion of this pullback and resolution to the upside to at least 2147 in the wave 5 of 1. And this high will be followed by a pullback in the wave 2. Pullback may be rather deep. Please get prepared to the mark at 1500 tag. I wouldn't be surprised by a pullback that deep. In the case I see something different, I will certainly post in the main room and in the Forex room. But again, in the main room I cover for gold futures, gold and silver futures. In the Forex I use the Forex pairs XAU to the United States dollar and XAG to the United States dollar. Zoom in. I see that this pattern still could resume to the upside in the wave CF2, but entire pattern still looking lower in what I count as the ending diagonal in the wave CF4. So most likely that rally would be just a part of the downside move, which is not yet over, and potentially the target may be found at 1730. Alternatively, I see this pattern as complete 5 waves of the low, 1, 2, 3, 4, and 5, and this pattern could end up with much lower targets in the textbook target area for the second wave's pullbacks. 3-2 retracement region and 618 retracement region form the bounds of this range. Please note that prior to the next move down, we may see higher targets in the wave B, but until we took out 2015, I would be very careful with massive longs, or at least I will certainly consider hedge. We still may trace another leg to the downside. Micro level for the primary account has been introduced. Higher targets are valid over 1882. As for the alternate scenario, we still may trace lower targets within the ending diagonal, and below 1932 or 1933, this is quite feasible scenario. So please keep in mind the two signal levels, 1933 and 1882. These counts are shown on this chart, both signal levels. Below 1933, I am favoring a local pullback. But in the case we complete this ending diagonal, I wouldn't be surprised by a really strong resolution to the upside in 1, 2, 3, 4, and 5 pattern. Then ideal target may be met at 2055 area. But again, that would only be wave of entire wave 4. Please don't jump the gun with massive positions taken with closed eyes. Now, silver. Pretty simple. This is my primary account. I count silver as completing the fourth wave of the low, and this pullback may be really deep as compared to normal pullbacks in the fourth wave, but we see a really strong extension within the third wave. So the fourth wave could reach a slightly lower, let's say 20.5 area. Prior to extension to the next high at 32 area. Micro level. Below 25.55, I see this triangle consolidation as a quite feasible scenario. Below the previous high formed today at 24.97, I see this target region as quite possible target. Alternatively, over 25.55, we may see this scenario, corrective wave B, within the wave 2 correction, as this scenario could provide us with much deeper pullback. Sorry, this is the fourth wave chart. This is what the ideal target in the wave 2 may be looking like. Don't be surprised by 18.5 area. Personally, I'm going to maintain this count until we took out at least 27.2. And of course, in the case we take out 28.88 or higher, then the next resistance is 32.3. Basically, that's it for the precious metals. And if you have any questions, please, the question box provided by the software interface. Sorry. Okay. That was a system message. Thank you. And now I'm heading towards the major forex pairs, the British pound. I start with the count of a large degree. This is what the multi-year or multi-decade chart is looking like. My preferred count suggests lower targets for the British pound. This count has been added on March 2020, and I see this triangle is still in play. This is internal subdivision of this triangle, and we are most likely in the wave D. At least until 1.3482 is taken out, I'm looking forward to lower targets in the D wave. And this is the target, the wave counts of a smaller degree. Over 1.2843, wave B of D still may take higher targets, may hit higher targets at, let's say, 1.3180. Only above this region I will have to really revise the count. And in the case we break below this level, 1.2843, then we're heading directly lower towards the so-called CFD, or at least towards 1.2484. This is the next target or next support where I'm looking forward to some clues. But the near-term signal level is 1.2843. So we have either completed wave B or going to complete at the next high. Please wait for clear and pronounced 1-2 to the downside, followed by a move below the signal line. Otherwise, we still may see slightly higher targets. Next, euro to the British pound. The count of a large degree. Potentially, this is really very bullish scenario. And we may be tracing wave 1 of 3 up, and this count is my primary. I'm looking forward to extension higher, but at the moment I see a really meaningful alternative presented on the daily chart, and more details are shown on the smaller time scales. I want to dedicate some time to this bearish scenario, as it really very dangerous to those who decided to take massive long positions. Below 0.9291, it really makes sense. So below this level, we may resume to the downside in the wave 3 of the larger degree ending diagonal. The primary count is valid over 0.8863, but we are already having 5 waves down in what I count as a leading diagonal to the downside of potential wave 3. 1, 2, 3, and 5. In the case we get a pullback holding below the critical level, then the next target in the wave A of 3 will be maybe found much lower. And only in the case we take out 0.9291 prior to break below this level, then our primary count certainly will be considered as more likely. And again, this is potentially a bullish scenario, but so far in no man's land between the previous low and the previous high, I would be careful with short-term and long-term positions, both. Or at least if you take massive long-term positions, please consider hedge, as below this level we may revisit the targets at 0.8 area. Next, Japanese yen. I couldn't call this chart as pretty clear. However, my primary count suggests some referring points for intermediate term perspective. Waves A, B, and C of B could set up the next move down towards at least 10,080. In the case this scenario is going to play out, then we are going to visit this resistance area in the wave B. A, B, and C down are supposed to complete correction in the B wave and trigger another corrective rally in the wave B. I do not see really reliable short-term scenarios in this pair. Only in the case we take out 10,580, I could project some higher targets for the wave for the wave C of B, immediate targets. But for now, I'm looking primarily lower for the wave B. Euro to the Japanese yen. Long-term chart. Waves A, B, and C. We are potentially in a very bullish wave C of B. And for now, I see that waves 1 and 2 of entire wave 3 are about to complete. For confirmation, I'm referring to the pattern of a smaller degree. And this is what the leading diagonal in the wave 3 may be looking like. Leading diagonal, then A, B, and C, expanded flat correction, but I'm looking forward to confirmation provided by a break over 12,051 region. 12,510, I'm sorry. This is another meaningful resistance where the rally could stop. We may be still dealing with A, B, and C, and only then we get final pullback in the wave CF2. Swiss franc. Long-term chart. I'm not sure that this is a high probability count, but however, we deal with what we have in our charts, and for now I count this decline as a part of a large degree wave B. A, B, and C up to follow. Alternatively, this wave B could resume lower after corrective pullback in the wave B of 5 of the ending diagonal in the wave 5 of C. The primary count is looking simpler than the counts of a larger degree. 1, 2, and 1, 2 may be considered as being in progress. I will be looking forward to higher targets in the wave 2, but below 0.9196, I'm looking forward to lower targets in wave 5 of C of B. So far, until this entire correction in the circle 2 is complete, I would be careful with this micro pattern, as I see a potential for a strong whipsaw here. I do not see high probability patterns in the wave 1 as well as in the wave 2 of 3. So please be careful until we completed this ABC pattern within the circle 2. Then initial 5 waves down within wave 3 would certainly complete a reasonable trade setup. But for now, it is the pair to watch. Euro to Swiss franc. The primary count suggests lower target for the wave C of A or for the circle B. It means that we're heading lower, but after some more upside action. My primary count has the pair in A, B, and in the wave C of 4. And this is what the micro count is looking like, with A and A, B, and C of 2. This ending diagonal in what I count as wave C of 2 may be about to complete, and bottoming at 1.066 could trigger a really strong rally towards this area. But again, this is the 4th wave, and I would be double cautious when I plan trades for within the 4th wave corrections or within the B waves corrections. So far, this is not a count of a high probability, and only in the case we get 5 waves up followed by 3 down out of this target region, then I will switch to this count with much more confidence. So far, this is the chart to watch. Canadian dollar. The count of a large degree. I primarily count this pullback as a part of the large degree wave 4, which is supposed to resolve to the upside in wave 5. This is potential target 1.54 area. And only in the case I see a strong break below 1.22, I will have the reason to revise the count. Another reason for revision is corrective bounce out of this support region. Corrective bounce could set up further move lower. But so far, this is a perspective relatively distant. But let's zoom in into smaller time scales. The daily, for instance. We're dealing with what I count as wave C of 4. And the third wave of this wave C seems to be still in progress. We're dealing with wave 4. Earlier, I had this really bullish scenario as a reasonable alternative, but since we got only 3 waves up bounce of the meaningful support region, I can't consider this count as a high probability, therefore I would not comment on it any longer. As for the primary count, this is potentially the 4th wave and it could reach higher. This is the target for higher for the next rally in the 4th wave, and over 1.1395 this scenario makes sense. We have reached the ideal target for the wave 1 of C of 4, and now we have complete 1, 2. So until this level, the previous low, is broken down, we may be dealing with potential bullish setup, at least local bullish setup. This is the primary count and this is the alternate. We may be tracing only 3 waves up within the wave C of a large degree triangle in the 4th wave. This is also an option, so please be careful as usual with trading in the 4th wave. The only reasonable trade setup I see here is only 1, 2 up, and then with a natural stop at the previous low, we have waves 3, 4 and 5 in the wave C. Only in the case we extend much higher, and on strong technicals we take out 1.0 extension, only this pattern could make the case for the wave 3 or 4. But again, I do not see a really impressive bullish potential, and this is a really dangerous chart for trading short term. But the next move down is supposed to reach at least 1.265 or 258 area. Ideal target resides even lower, but the next low will be the reason to revise the count and reassess positioning. Euro to Canadian dollar. One of those charts when I raise my hands up. I don't see a really high probability scenario in this part of the chart. This pair seems to be tracing a long-term consolidation, and this pattern is open to both sides. Below 1.6152, I see lower targets open. This part of the pattern may be looking as a leading diagonal to the downside. 1, 2, 3, 4, and 5. So as long as this previous high is holding, we may be dealing with impressive bearish setup, but I do not see impressive short-term pattern to trade and present. So I do apologize, but I couldn't add anything serious about this chart. Personally, I would stay away from it. And meanwhile, we are heading towards the minor pairs. Let me review a few questions I see. Sorry. Yes. Thank you so much. But don't forget about questions. Thank you. Now, Australian dollar. The count of a large degree. We may be dealing with A, B, and C up, and two options for the wave C are shown on these weekly charts. One of them is marked with the red count, and the second is represented by the black count. The red count is highlighted on the micro scales as a primary micro count, and the black one is the alternate. And now let's zoom in. Wave 1 of the red count may be considered complete, and now we are working on the wave C of 2. And wave C of 2 may reach higher targets prior to the final flush in the wave C of 2. Wave B going higher, wave C down. This is still an option, and below 0.7306 I remain very skeptical regarding the most bullish black count. However, it is still an option to keep in mind, and this option is better looking over 0.7004. Above the signal line, I would be looking forward to the higher targets in the wave 5-3. Only strong break over this resistance at 0.7485 could open the door to the really bullish scenario in the black circled one. So far, this count is looking better, in my humble opinion. So, back to micro. This is still correction, and I'm looking forward to higher targets anyway, regardless of the count of a larger degree. But internal wave subdivision within this correction is not that clear that I would like to see for active trading. New Zealand dollar. I have to note that most likely this pair has also formed a meaningful low. Though I do not like, honestly speaking, I do not like this wave structure. I would prefer lower targets, even with more complex wave structure. But we deal with what we see on our charts, and my primary count has this pair in the wave 3 of 1 of the bottom. The count is valid over 0.6355. Possible options. We're still within wave 3, and this may be a leading diagonal in the wave 1 of 3. 1, 2, 3, 4, and 5. Pretty simple. Wave 3, pull back in the fourth, and then extension towards 0.7332. Alternatively, we may see a deeper pullback in the wave C of 4. The key is, will the pair be holding over this pivot support or not? Personally, I'm leaning to the bullish scenario, and wave 4 may reach this level. Wave 4 could take more complex shape. A, B, and C up, and only then we get a strong pullback in the wave C of 4. So again, this pair is not for active trading right now, but potentially it may be looking quite attractive. Next in my plan are Mexican peso, Russian ruble, and Polish zloty, and I've missed Swedish krona. We'll get back to that pair. We'll start with the Russian ruble. This is long-term chart starting in early 90s. And the basic target projection for the Russian ruble is based upon long-term bottom. And the ideal target for the Russian ruble is 111. If we take a look at the levels we're currently at, then we're facing a rally around 50%. And this is really impressive rally when we talk about Forex trading. That is why I'm going to closely track this pair, and it is daily updated in the Forex service. The primary account has this pair completing with 1 of 3 up. Entering correction in the wave 4 could take more complex shape, A, B, and C. Then wave 4 is supposed to trigger a rally in the wave 5 of 1, then corrective pullback in the wave 2. And then we have complete launchpad for a strong rally towards this area in the wave 3. If you want to see how the rally in ruble I used to develop, then take a look at this chart. And this dynamics may be seen one more time in the wave 3, or even 2 times in the wave 3 and 5. So be prepared for that kind of a move. Alternatively, I see a corrective rally in the wave B, followed by pullback in the wave C of E. Means that the triangle may not be yet complete, and this pattern, this count is valued below 82.81. I wouldn't bet much money on this scenario. Anyway, this is the same target I'm watching based upon the primary count. So pullback of this resistance will be the key. In the case you see corrective pullback, then we are in the wave 2, and it's time to start forming a really potentially aggressive positions with regard to hedge. And this is the spot where you can consider hedge for your longs, and then watch how this pattern is unfolding. Anyway, in the case we get a really strong pullback in the lower in the wave 2, then your hedge will play out and pay for your interest to this pair. Euro to the Russian ruble. Long-term chart. The same pattern and potentially complete triangle in the fourth wave, and potential targets 125, 138. Again, 50% of potential rally. The only reason for concerns regarding this pair is pretty shallow wave 2, but I do not see a better count at the moment. Other options seem to be quite exotic, and I prefer this one. And the primary count, micro count, supposes wave 1 of the circled 3 to the upside. It means that the pair may be already in the heart of the third wave to the upside, already in the circled 3 of 3. So I wouldn't short this pair, and only hedging short positions could make sense, in my opinion. Alternatively, I see this pair as interpreted that way: 1, 2, 3, 4, and 5, but I do not like this count really much. Anyway, wave 2 for this alternate count I do not like, maybe looking this way: A, B, C, D, and E, and then triangle is supposed to resolve to the downside in the wave C of A. In the case this pullback holds over 87.8729, then we are still in the wave 2 of the leading diagonal to the upside. This is potential path for triangle, and resolution to the downside completes wave 2. And then we are still heading higher. Again, I wouldn't short this pair, and only short hedge makes sense, in my opinion. Polish zloty. The primary count supposes wave 1 supposes wave 5 towards 3.46, and we may have completed wave 4 and now starting wave 5 to the downside. It means that waves 1 and 2 may be considered as done, but I do not like this nano pattern. Below 3.94 it makes sense, but above this level I would expect higher targets. Within this scenario I marked as a primary 1D. Potential targets are shown on the chart. The count is valued above 3.7648. So when we talk about primary, please wait for a break below the previous low, the low of wave 1, and only then we are dealing with wave 5 of CFB. Mexican peso. The count of a large degree suggests corrective pullback to much lower targets. Two options. The first one has the pair in the wave A of this correction, and the second one suggests it is in the wave 1 of B of C to the downside. And now I'm looking forward to reaction to this support at 20.57. Minor scale. The primary count 1 and 2 with the resolution to the downside, and the alternate scenario with support at 20.57. Reaction to this support could force me to switch to this count as my new primary, but I assume we'll see the answer pretty soon. And now a few words about Swedish krona. Potentially interesting chart. I have a long-term count for this pair, and it is looking like it may head to way lower towards 4 area. I'm not sure that this count is a high probability, but I couldn't miss this potential. And for now, I think that completion of the wave 1 of this long-term pullback, of long-term correction, is a reasonable count, at least for now. At least as an operative scenario. This is what this wave 1 may be looking like. We're completing wave 4 and below the previous low. These are my next targets 8.15 and 7.6. Alternatively, I can count this pair as completing wave B of a large degree upside correction. This ascending correction could reach at least 9.38 or 9.8 in the wave 2, but the next move is supposed to be much lower. Alternatively, I'm posting this count 1, 2, 3, expanded flat correction in the wave 4, and finally resolution to the upside. That is why the next low is the really pivot support. Which could trigger a really strong rally. This low is what I'm going to closely watch. Okay, that's it for the Forex pairs. Any new questions? I see. Thank you. Yes, thanks. And now to the crypto world. I used to track 3 or 4 charts within the Forex service. Bitcoin, Ethereum, Litecoin, and from the recent period is Link. But for now I'm going to present only analysis for the Bitcoin and for Ethereum. Bitcoin. the count of a large degree suggests corrective rally in the wave C of B to complete, and now the primary count has this crypto pair in the wave 4 of this wave C of B. The primary of a smaller degree suggests strong resistance at 11,991. Here I anticipate the cyclic beta complete and trigger a drop in the wave C of 4. This is the ideal target for the fourth wave, projected approximately at this period of time when the Bitcoin has been testing this resistance. The support is still on the table, and only in the case we start tracing corrective pullback of this resistance or take out this resistance on really strong technicals, that would force me to switch to this bullish scenario, but I don't think it's the highest probability. Waves 1, 2, 3, 4, and 5. Again, reaction to this resistance at 11,991 will be the key. Ethereum. Opposite scenarios. Large degree bearish scenario, targeting to the targets below 50. Alternate bearish scenario, targeting to 160, 125 area. And finally, a really bullish scenario, targeting to much higher. So, as I used to read, some of the comments were heading either up or down. Exactly. Let's take a closer look. First, the daily chart shows clear overbought signal at the recent high. It means that upside potential is not that big as many bulls would like to see. And what we see on a smaller time scale. Corrective rally in what I count as wave C of 2. This is the ideal target, and here entire bullish scenario will be tested, as well as this bearish scenario. 427 is the key resistance, and exactly at this region both counts will be tested. In the case the pair won't be able to take out this resistance, we're going to see a really strong drop in an impulsive manner in what I count as wave 1, or alternatively in the circled A. In the case we take out this resistance, marked with the red bold line on the alternator micro chart, then we're in the wave 3 of 3. And please note that this bullish scenario is projected on a logarithmic scale, and potential for this rally is at least 2064. Unfortunately, I cannot consider this count as a high probability right now, and most likely we will turn down, but the answer will be given soon. So basically that's it for today. We came through the dollar index, euro, main forex pairs constituting the basket for the dollar index, selected minor pairs, precious metals, and a couple of crypto pairs. Basically, this is the list for daily update, or at least couple times per week updates in the Forex service. I used to do 2 live videos per week, one after the close on Wednesday and one during the European market hours on Friday. If you wish to be enlightened with my view on selected pairs of interest, please post your questions in any of my threads, but I used to post Forex charts only in the Forex service. Any questions will be highly appreciated, and you can always join the service and use your free trial period. I'll do my best to satisfy your interest. And as I used to think, The safest haven of all I know is the ability to make your own trading decisions. This is the main focus of my analysis, and I will be happy to see you in the Forex service next time when I provide the live video. And for now, if we do not have more questions, I see the questions. Thank you. Thank you. What is the lower target for the BTC to USD? Thanks. BTC to the USD. The lower target. I think that you mean this large degree scenario. Let's just make preliminary projection. Very preliminary. A, B, and C. And now we have 2.5, or at least 3861 area. To be honest, I do not see high probability scenarios in the Bitcoin. I understand the bullish bias mostly prevailing in the crypto world, but for now I would be careful, and only in the case we take out 17,300 I could switch to much more bullish scenarios. Right now, this further decline is looking quite viable, in my opinion. This is the path. The next. Thanks. The current G and WTI counts in a webinar. I do apologize, but this is a Forex presentation and I do not cover energy charts in my Forex service. So natural gas and crude oil are out of the coverage. And out of the coverage during this webinar. I do apologize. Any more questions? I don't see more questions. So thank you all for joining this live video. I was really happy to see you all today, and will be more happy to see you next time when I provide a live video and to see you daily in the Forex service and in the main room of this wonderful site. Thank you so much and have a great evening. Bye-bye.